Good morning. Let me figure out how to open up the messages on this restream so I can see the audience if they're
Oh, wow.
typing.
I'm live.
Yep, you're live.
Sorry, produce. My wife has just showed me
Nice.
some produce from the
I
garden.
love that.
Right, go on.
I'm going for WA.
Yeah, I'll see you later.
Sounds good. Hey, will you type a message in the YouTube link? I don't know how to see if I'm live or not.
One sec. Doing that, trying to do that now. Doing it. YouTube.
All right. So
You good? I'm just.
No, I'm still trying to.
You get the message?
You typed in YouTube?
Yeah, I have. Yeah. Yeah.
Oh, okay. It popped up. All right.
Yeah.
So now we're live. It's November, or it's November. Good grief. I was back testing November last night. It is August 21st, not November. It's not Thanksgiving yet. And we are going to put the highest probable trades on. And this is Costa, my good friend,
Hey.
from across the big pond. And he's learning how to build the workflow process. So he's going to lead the approach here. And we are going to start from the step one. All right. I'll drive. You tell me what to do.
Yeah, so if we can check out the daily chart showing where we are with respect to the NFP, please.
Okay. We're here.
Okay, so we're above. Two observations here. We're above of the NFP Friday, but we're below previous month's mid. That would mean that we're looking for our lows of the day between 5 and 11. That would be the first observation I'd have from that. Yesterday was a red day, so I think we talked potentially yesterday about perhaps slowing down next week. I think I'd be mindful of that today to see if we can break last month's mid or whether we have some kind of choppy day. If we can now look at the weekly, I want to see where we are with the EMA.
All right, before you get into that, so the one clue that we know, right, is just we expect, when we look at this, the calendar, today is Wednesday. For some reason I thought we had, nope, we have FOMC minutes today. And then we have 17 weeks, which we don't care about, but we have the 20-year bond auction at 1,300. So these are two catalysts that can inject volatility into the market. Okay. So we can expect the realized volatility, which all realized volatility is how much you move up or how much you move, period, right? We can expect that to get picked up during the 1,300 to 1,400, so the afternoon session. We have to be aware of that. These mortgage rates, that will happen at 7. Yeah. So this is one big thing is the housing market and job markets are on Front Street of being every single data source. The market is picking up clues on if the Fed Reserve is going to be able to pull off the soft landing or are we going to have a hard landing. So one slip up in that can have this whole thing turn around, right? Which is why everybody's on eggshells right now. We were looking yesterday for to close above this previous midpoint. We rejected it hardcore for 1, 2, and possibly 3 days in a row, right? So we're going to really pay attention to how we close the day in relationship with that, right? We also have to realize that momentum we're below previous month's low. So we're trying to see, is this momentum shifting and this is just a retest? And so when we expect it to come and put the higher low in, right, and retest all this area. If it decides to do that, we're going to be paying attention to this NFP range to make sure that we can stay above it, right? So a good call on that. All right, moving to the weekly.
Yeah.
All right, which we talked about in depth yesterday on a one-on-one.
Yeah.
Right. Explain what we're looking at here and the purpose of it.
Yeah. So we want to see how far we have extended from the 5 EMA. I think I'll just measure that now. Currently, we are just under 2%. We'd be looking for some kind of reversion to the EMA, anywhere from 2.5 to 5% from that range back
So explain
towards
to me
the.
the 5 EMA. What do we utilize? What's
It's
the
a constant.
significant? Is a constant variable, yes, and it's
Yeah.
measuring the variance between where price is hitting to see where the standard deviations on the weekly, where we can expect the market has overextended or
Yeah.
overreacted, overpriced in whatever the earnings catalyst, news catalyst, any of those catalysts are. And so we're expecting, like we have, it's not that it's guaranteed that we're going to slow down and pull back
No.
and let this 5 EMA comes, but like we can look from historical data that once we get a certain, if we price in too much too fast, right?
Yeah.
Here we priced in 5%. We had to slow down for week 4, week 3, and week 4
Cool.
for us to slow down, because what's happening here and why we look at the weekly is the workflow operations of the orders. Like if it gets too bombarded, too quick, too fast, right? Orders are being broken and not being filled correctly in that 2-day process of life cycle of a trade.
Sorry.
Don't worry, man. Like, listen, I have 2 English bulldogs. Like, you'll probably hear them snoring and farting and all kinds of stuff. They're my quants, my risk managers.
Nice one.
But yeah, so like,
He's my boss.
continue talking about what we're looking for in this, on this step, because we went through a whole list yesterday.
Yeah, so it's kind of like waiting for the EMA then to catch up. If we are having a slowing down of price, the EMA will come up and will eventually catch that up. Specifically yesterday, and in terms of my notes, because I did write this up, get the right mouse.
Just so you know, Costa is actually writing up a SOP, a standard operating procedure. It's kind of like checklist for the
Yeah.
viewers to follow. And he's doing a very well job at it. Very good job at it.
So, Mickey, I must ask the question. We referred to something as key indicators yesterday, and where I did my writing was that, are we referring to the key indicators here? I gave that a name in mine, but if it's just kind of this, I must admit I'm struggling a little bit to talk a little bit more regards the EMA. I just like it.
No,
We
that's
wait
okay.
for
You can use your notes if you want.
what I have there, but
Yep.
I'm not sure if it's relevant. So we talked yesterday about when we look at the Asia range and if it's a little bit smaller, but we could be overextended both previously in terms of days and the New York session. We could be looking at a higher day during the morning.
Yeah. So what I was telling you yesterday, right? Based off of this extension from the EMA, right? The daily profiles will signify, like once we're slowing down. So this week, or even this week, where we obviously overextended, the daily profiles and the alignment of what Asia does with London and what London does with New York will be pretty obvious, right? So like if we look at this chart right here, right? Let's go to the week of July 8th. Right? So let's go to July 8th. That's August. right? So coming up into July 8th, we're getting those lows of the days at 8:05, at 8:05, at 8:05, at Asia, at, and then we're starting to hit the point where at this point we're extending 5% on the weekly EMA, right? So now what are we noticing is that instead of putting the low of the day in, right, we're starting to notice that the profile is starting to shift for the day, and we'll put in the high of the day in at 8:05. And so the relationship between Asia, London, and New York, right, is starting to shift, and we're starting to notice. Remember, we went through it, and
Yeah.
we started noticing false days and
Yeah.
highs of the days happening in the New York for us to close lower.
Yes.
High of the day at 8:05. Right, this is a 65-minute candle, so that's why
Yeah.
8:05 is somewhere between the 8:05 and whatever the 65-minute candle is. Right, but that 8 o'clock hour is putting the high of the day in, and then you can see false days happening in New York, and so and you can see Asia's having trend days lowers. That's signaling that you're slowing down. It doesn't mean you're crashing, even though it looks like you're crashing intraday on the weekly. You're just slowing down
Slowing down.
to let that EMA catch up. Because remember, the orders that are going through the workflow process to get filled, right? We can't price things in too fast, too quick, right? And people think they can see the price and inaction of things on like the daily and the intraday charts, but it actually is the clearest ever on the weekly, right? Just using a simple 5 EMA as a constant variable to measure. There's nothing special about it, right? But it tells you by day, by week of the month, how extended whatever that economic news or whatever the earnings news or whatever that quarterly pricing in effect is happening. It's telling you once it gets priced in when it gets too overextended to either the upside or the downside, right?
We also discussed during that conversation, I think we mentioned about Tuesdays and about potential for crossover. Well, actually, potential is probably the wrong word, but a crossover of the Tuesday range, and also that. Just in my
So
notes
we
there.
know that we have. Let's go to this chart real quick.
It's going to cut this one out. Come on. He's very demanding.
Yeah, it's okay. So if we look right here, we can see that. Let's extend this out so we can see more data. Let's go to the 1 hour. Let me fix this. Let the data catch up. All right, so out of the last 188 weekly profiles, that we can see that the low of the week either happens 20% of the time on Monday, 14% of the time on a Tuesday, 12% on a Sunday, and the Friday is 25%, 19% on a Thursday, right? So this is incorporating that 2022 and current market all the way from there to now, right?
Right.
So if we think that, so Tuesday, right, when I'm looking at Are we overextended? That's pretty. This Monte Carlos is crazy. If I'm just gonna leave it like this. Boom. All right. So if we need to utilize on the weekly, if we're expecting a slowdown, whether you use Monday, whether you use Tuesday, whether you use Sundays, opening gaps, whatever, right? You have to have that fixed. Like I know the ICT community uses Sunday new week opening gap. DR community uses has all the statistics on that Tuesday um range, right?
Hmm.
Like whatever it is, it's just an anchor point low early in the week for you to say, hey, guess what? Once we cross this line, that's going to signal that the high of the week or the low of the week is in play, right? So I have a mindset of what's going to happen on Wednesday, Thursday, and Friday for the rest of the week, right? And that's how we synchronize that with, you know, like, are we overextended? Like I was telling
Yeah.
you
Okay.
here, right? We're not overextended. We got overextended to the downside
Yeah.
by 9%, but now using the fixed anchor, we're only at 2.28%, right? So there's absolutely no reason for us to sit here and freak out intraday and think, oh my gosh, we're going to crash and burn because, like, whatever the market's pricing in, yes, this was a great move, right? And one that did get overextended, but it's building our expectations of what to expect intraday. So worst case scenario, we just start slowing down, right? But
Yeah.
now we have to consider that we're in the third week of the month, which is the highest distributed month statistically. And then we have all these economic news events, CPI, FOMC minutes, Jackson Hole, NVIDIA earnings tomorrow or on Thursday. Like, do you really think it's realistic to say with all these economic news drivers that inject volatility into the markets that this is going to be the week that we slow down? Like,
Yeah.
no, this is going to be the week where we get overextended again, and then we have to spend week 4 and week 1 of next month slowing down and letting the orders catch up. So that's why it's important to pay attention to our daily profiles and to make our measurements off of a fixed constant and not something
Yes.
subjective and, you know, not
Just
constant.
just writing something else down a second. Okay. No, that was brilliant. And obviously in the SLP, that needs to now be moved because I dropped it the wrong place. Okay.
Yeah. What does SLP stand for? Because I never heard it called that before.
Oh, I took your lead on that one. I
No, it's SOP, Standard
standard
Operating,
operating.
Standard
Yeah.
Operating Procedure.
Yeah.
I was like, what the
Cool.
hell is this SLP? Like, I never heard of that from a project management standpoint.
I thought it was like standard learning procedure. It's just like,
We'll make up new acronyms. I'm from the Army.
yeah.
Like, I don't care. Henry, my man, Henry is one of the best traders I know.
Hey,
He
Henry.
is he's from London and just a swell guy. He's been with me in almost my whole trading journey. And boy, me and him have gone through the rabbit holes together. We've gone through the trenches of retail trash together.
Yeah.
Nothing but respect. All right, what's the next step?
Yeah. So after we've looked at that, we then can scroll down. So we do some situational awareness, which I guess we've kind of done, but I'd like to make a note of where specific points are on our chart. So things like where yesterday's daily mid is, I want to know what day it is. So I'm kind of looking at what the previous day did in terms of the mid. I might be preparing and getting ready with my database tool for looking at extensions coming out of Asia, making a note of what happened there, confirmation direction, originally I was looking at what the model was, but we talked about that. And now, in terms of data that I'm going to be feeding into my database, I'm not so interested in that. So it's kind of all about.
Yeah, because remember, like you start off with 4,200 days
Yeah.
of data, and you're injecting whatever Asia did, whatever London did, but you have to do some kind of, you know, database filter management, right? What's the most important variables that we're pulling out of Asia? What's the most important variables that we're pulling out of London? Because if you put all the variables, you're pulling unnecessary data out of your database, and it's going to skew
Yeah.
what the statistics are when it doesn't really matter,
Yeah.
right? So you have to be aware of those, and that's why I tell you I just focus on right now. Like I've done all the filter management, and like the relationship of Asia with New York only matters in certain situations. Like if it's stuck in the middle of New York's range, right, that matters. But if it's
Mm.
above it versus or below it, that's really irrelevant, right? Same with
Yeah.
London, right? But the price movement away from that Asia range or back to it, that's more relevant for the skeleton data that we're trying to pull up for New York session. All right.
Cool.
Remember, you want to keep this, since this is a workflow process, you've got to keep it in steps, right? So you mentioned that you're going to check out what we've done in relationship to the previous day. So far we are stuck right in the middle, as we can expect, being a news-driven week, right?
Yeah.
We're waiting for those catalysts to actually move this market, but we can see whether you use DR or ICT, right, indicators, we can see that Asia went long, London is going short,
Short.
right? So when you go into the database, Asia went long, and then it came back and breached the midpoint and looks to be targeting these Asia lows. And what's doing it? London's doing it, right? So those are the two variables. And then you want to see how far did Asia extend versus how far London's extending and what those probabilities are, right? Because the market didn't give you the convenience of a clue. Did momentum
Mm.
shift low or high based off the previous day? That clue has not been given to you yet.
Mm. Would you say that London, though, by going short, has showed its hand, and therefore we can start looking at our structurals and our
I would say,
time?
yeah. So now we want to put the probabilities on our charts,
Yeah.
right?
Yeah.
The time base, midnight
Yeah.
settlement, 1800,
Yeah.
all those, and then structure base, and then we'll go with projection base.
Yeah. Okay. So if we're looking, I have that set up here. Let me just change the times. I do 12, 23 for the midnight.
It shouldn't be 23. You should be able to just put, oh, you're on a different time zone.
Mm.
Yeah, I have it set to UTC 5, and this is a free indicator to all the viewers. Just go check out Austin Clark's Twitter page and go under his highlight tweets and, find the one called the Midnight Snap and follow the instructions. Yes, he wants you to join a wait list or sign up so he can have your email, so he can email you 1,000 times about how great Wolfpack is. But it gives you one of the most powerful tools for free that you can have.
Absolutely. You
So
can pick.
yeah.
No, I was just going to echo what you said. I've been exploring more and more with this tool with some of the time candles that I'm interested in as well at various points in the day. And it's like, they're oh my God moments. Oh my God, I can now attach a probability to some kind of reversion to
Mm-hmm.
this time point that I'd never even considered before, It's fantastic. It's an amazing tool.
So Zeb is asking, what's the Asia and London time in terms of EST? So I won't confirm. I'm not here to tell you what your definition of Asia markets are, because ICT community uses a different one than DR community, and then this kind of style of trader uses these times. I'll tell you that I used the 1930 to 2030 as the initial balance or the DR range, right, for Asia, and then the session starts at 2030 Eastern time, so 8:30 at night. And yes, all times are in New York. And then it goes until 03 or 02, and then from 2 to 3 is a transitionary time, and then London is going to go from 3 o'clock to 4 o'clock, and then this London kill zone or session will go from 4 to 8:30, right? And then 8:30 to 9:30 is that transition in period time for the New York. New York is 9:30 to 10:30, and it goes until 16:15. I had TFL do a public script on measuring and return. Oh, nice. All right, back to this. All right, so right now we're going to do our time-based probabilities, right? And our time-based probabilities start with midnight. So we can see that there's a 75% probability that midnight gets retraced to between 8 and 12. So 19,832, 75%, and then we want to indicate 8 to 12. Do the same thing for 1800. $67.
Yeah.
And it looks like 802. And then we want to do, which one was this? This was 1800. So now we want to do settlement time 1615 because this is the one that matters to the workflow. It's a close price. Okay, and that lines exactly up with midnight. So if you've noticed, that settlement either lines up with midnight or 1800 on most days. It's pretty fun to think about. All right. So now we've got our time-based probabilities on the charts. And then we have, now we'll go do our structure-based, right?
Yeah.
Right. So now looking at the structure, right, we can see this high.
Yeah.
Right, which happened at 1:30.
Yeah.
So we got the 1 o'clock opening hour right there. We can go on and check a probability for that.
1 o'clock.
And I'll let you do that. And
yeah, I'm on
me.
it. 1 o'clock would be 1.
And
Just
make it a
for...
all day.
All day, no problem. So wait till 16. Okay. Just waiting for it to load.
Make sure you have it back on the chart too, so it doesn't jack up the script.
Yeah, so I've got 79.2%. Just checking, that is the session 8 till 4 p.m. and open hour is 1.
All right, let me check.
I've altered the UTC to UTC 5 minus 5.
8 o'clock to 16:15.
15.
79.2. Yep.
Yeah.
All right. So if we look at other structural points, we can see that the 1300 is down here. So we can pull this low right here.
Yeah.
Except for now this one, we're just going to have to do the 1259 because it's going to incorporate as if it's that day of the week. So
yeah,
we can do 1300.
I'm glad you said that, because that was something that was always on my mind. How does it know? But you just explained the cutoff effectively. Yeah, or 50%, 49%.
Okay, so now that we've done our time base, our structural base, now we're going to do our projection base.
Yeah.
7, 8. You said it's 59. All right. So now doing that, if you're an ICP trader, you might want to use the central bank dealing range between 1500 and 2000, and then you measure where the standard deviations are. If you are a flout trader, like you want to do from 1545 to 1659. If you're a DR trader, you want to use 1930 to 2030. If you're one of those, I don't know, we won't even get into that. So like you want to decide, right, what kind of projection base you're going to use. The biggest thing that's important is sticking to it, measuring it over multiple market conditions 100%. And how it acts, right? For me, I like to use DR, right? Because DR collects some of the best statistics for a daily profile that's out there, if not the best that I've ever seen. And I've got nothing but respect to them in those regards, right? So we're going to use that, right? And what we're going to do is we're going to filter what did Asia do, right? So put it on this, right? We can see, or we can use, if you're DR, you can use your DR script, right? But we know that Asia went long,
Yeah.
right? Outside of the DR range or the initial balance for you auction theory traders, right? It went long, and then we need to see what standard deviation it went to, right? So it went to the 1, and then did we break that Asia between 3 and 4? We did. So that's going to be a variable that we put in our database. And what did London do? It went short, right? So most of the time, doing your analysis this early in the morning, right, this London is giving you exposure risk, right? Because this can turn into a false day real quick, like it's looking like it's going to go higher already.
Yeah.
But if you look at what kind of market condition you're in, if you look at this chart, right, are we below previous hour midpoint? Yes.
Yeah.
And this looks like it's starting to reverse right now between the 5-9 box, right? So this could have been the reversal, which is have to pay attention. All right, and we have a new 6 o'clock hour. So we're trying to measure during this time from 6 to 7 where momentum is shifting for the new H4 period, right? So going back to our database and putting in what Asia and London did, right? We're going to find the probabilities of these projection-based probabilities. So in Q,
I'm on it.
In Q, no holidays. Asia was long, true. Was the Asia broken in between 2 and 3? No, it was not.
No.
We're pulling just the stuff that the market has told us so far.
Yeah.
Just the live price portion of this.
Yeah.
Right? Live price is telling you this is what we have done and this is what we are going to do. All right. So London, what was London? London was a short.
Short.
And we don't know if it's true or false. So we can toggle our data set to see what both look like.
Wow.
But right now, with nothing selected, it looks like New York's going to be below the London period.
Yeah.
right? But if I put, and then we know that the Asia was broken between 3 a.m. and 9:30, so that needs to be true.
Yeah. Done that.
And so now we can see with just the variables that the market has done, it's saying that there's a high probability that New York will be below London, right? But we will be long, right? But then, like, we can also toggle in, do we breach this line in the sand from London, right? And if you want to know what this line in the sand from London, where it originates from, you have to join the DR community. And this is not an advertisement. I don't get paid by them. It's just I would feel like it was disrespectful to them by teaching their stuff that paying members pay to use, right? But so like if this line in the sand from
Mm-hmm.
London breaches between 8:30 and 9:30, what would that look like? So we think that 9:30, if New York's going to be below London, and then long
Yeah.
in the afternoon like that,
Yeah.
right? What would it look like if we breach this line right here during the 8:30 and 9:30?
It shifts, Mickey. It shifts to range. Um,
Exactly. So
Still,
now,
sorry.
so yeah, you're absolutely right. With this line being breached, right, we went from the probabilities of New York being down here to like this, right? So now we pay attention to this line right there. And now let's say we take that variable out. Let's say that this continues going long for the rest of the day or the rest of the London session. What does that do to the probabilities of New York? Right? That completely shifts the probabilities of where New York's going to open at and go.
Mm,
So that's why we identify those lines in the
mm,
sands like
mm.
this that will shift the probabilities of where we open. And at the end of the day, the probability of New York session is a long, regardless of any of these scenarios. But remember, we're trying to synchronize the low of the day and where that's going to form, right? And
Question.
yep,
Question. I'm not sure. Okay, so if that does happen, and we're looking at a range scenario, and looking at a range long, but we're above, we're going to be above the midline, so that it is a range. Do we care, or do we speculate that actually the first movement of the range, if it's above, has to be down before that the move up? In this case, in terms of what the data is telling us, is that
say that one more time, brother.
yeah. So if we break the ODR mid, okay, and we're
Mm-hmm.
getting closer and closer and closer to where it is that we
You're not
open.
supposed to say this stuff out loud. We're not
Okay,
trying to be disrespectful to the DR community by
I
saying what it
apologize.
is, but just
Okay,
use over underline in the sand.
yeah. Okay, so the over underline for the London session,
Mm-hmm.
um, and we're above that closer open in New York
Mm-hmm.
because we are our data suggesting range. For that to be a range, it has to take both sides, right?
Exactly. Yes.
Yeah. So obviously that's a statement, but is that something? I guess what I'm asking is how much attention. I guess we got to pay attention to it because it will.
You got to pay attention to it
Yeah.
because what that's indicating. Because remember, this all comes down to we're looking for the low of the day or the high of the day, right? Because it will be obvious once it forms. It doesn't seem obvious while you're in it, but that's why we do this kind of stuff because we want as much stuff on our charts to show us that, like, we can come up here right now and continue going long, but the probabilities are still going to be during the 9 to 10 o'clock candle for us to come back.
Yes.
And remember, like, we can shoot all the way up to here by 8:30, but 9:30 the 1030,
Mm.
right, we can damn sure expect for us to come back, and the probabilities are to come take these lows right here,
Yeah.
right? Because number one, we don't have a news catalyst at 8:30 that's going to identify the trend and kickstart the trend, right? And Asia and London has not incorporated the trend yet, right? So this is all to identify: are we going to do a normal day or a trend day, right? We know Wednesdays are a trend and condition kind of style day, right? But probability wise, out of 2,000 days, right, we can expect for us to come back and do a range. So take out 9:30 if we continue up, or if we breach this over under line in the sand between 8:30 and 9:30, we can expect that both sides of this London will get engulfed. So
Yeah.
now our job is to find the probability of what's going to net that, right? Remember, if you throw a ball into a
Yeah.
net or kick a
Yeah.
soccer ball into a tight net, it's going
Yeah.
to go down, but then momentum is going to shift it back,
Yeah.
right? And so our job is to find the net of where that low of the day scenario is, or where the high of the day scenario is going to be, right? Because remember, this 9:30 to 10:30 has the ability to make the high of the day scenario too, especially if the market's saying we're overextended or momentum from a higher time frame has shifted. Then we
Yeah.
can expect the high of the day scenario to come. And so when we come and return to these probabilities, guess what? We're going to continue down versus up.
Yeah.
I'm trying to
As,
figure out those generated market clues that tell us which ones we're looking for using London and Asia variables.
cool. Okay.
So right now we're going to put our projection-based probabilities on, right? And we're not going to put false. We're just going to do it as what variables have played out right now, right? And we can see.
I'm just loading up. Okay. Daily one, I got 96.
Let's not say. Oh yeah. You can say daily one. That's fine. I'm just trying to be very respectful of the DR community. 96. What's 2.5?
81.
81. What's the next one?
53.
All right. What's the next one up?
31. Tails
Oof.
off. Tails off, yeah.
Yeah, so for me, it's about being a man of integrity and character. And even though I use his stuff, M7 stuff, and I'm out here in the public, I just still want to be respectful of his teachings.
I understand. And I apologize for my.
No worries, dude. Like, this is our first time doing it, and then let's do the negative ones.
Yeah. Yeah. So on the negative side, the one 73.
All right. 761, 73.
Yeah.
All right.
And then the next one, 2.5, is 55.
Okay. Looks like an even split.
Yeah.
You said 55?
I did say 55, yeah.
Okay. And the next one?
Is 35.
Jeez. It's literally
Yeah.
an even split today.
Yeah, it is. Yeah.
Which means the market's not going to show us his hand early. We're going to have to be patient.
Mm.
All right. So now, what I like to do. So yeah, like if you're using the hourly boxes, because I use this screen to align historical data, which is on the right. This is the live price portion.
Yeah.
This is put in a reversal. We're above previous hour midpoint. We're above the 5-9 box, so we can expect higher pricing. Doesn't mean we're going to go higher all day. We could,
Mm.
but because all of this, as we go up, has a probability of retracement.
Yes.
All right. So now, like I said before, I like to use this open, high, low, close stat map by Josh Yu. It's probably one of the coolest tools I've ever used. And so we're looking at over the last 10 days, or you can do 100 days, or you can do 1,000 days. I like to use, let's say, the last 20 days, and because that averages the last month worth of trading. And I like to look to see. Let me hide drawings. So what it does is it takes open, which he has as midnight, and it shows the average prices and time. So we know that the every daily candle, right? Let's say this is a daily candle. Damn it. Never mind. We're not going to do that. Every daily candle has an open, high, low, close, right? And every daily candle has a false wick, right? One of those wicks are the wrong side,
Yeah.
right? Before the actual distribution happens of that daily candle. And so what this statistical tool does is it allows us, Danny Walker, good morning, Danny. It allows us to see over the last 20 days or 100 days, whatever you have it set up, when the 451 is usually the average of when the false move happens for the day, and then where that daily range usually goes to and from, right? So now we use that just to check our work, right? To make sure that what we put on our chart is still reasonable,
Yeah.
right? And we didn't put some kind of anomaly on our chart, right? Because we don't trade anomalies, we trade high probabilities, right?
Yeah.
So now what we're going to do, we've identified our line in the sand that shifts probabilities. We have identified the highest probable 9:30 at 10:30. So now I'm going to 9:30 at 10:30 is 166. I need to measure that. So 9:30 should be at least that big because that's the last 10 days average of the 9:30, right? And if we're expecting a move like this, right, we can expect it to be a range X, right? And we can see that we can expect it to go the 73 probability right here, the 81. Well, since the 9:30 to 10:30 is the most volatile time of the day, right? We can expect it to at least take out these higher probable projection-based probabilities, right?
Yeah.
All right. So now we've used the Josh Yu tool. We put our market structure probabilities, our time-based probabilities, and our projection-based probabilities on the charts, right? We have the highest probable 9:30 to 10:30, and we have the highest probable directional move for the day. So now our job is to figure out what's the average ranges, right? And so what we use in the pack trade group is we use the 4 to 8, the 8 to 12, and the 12 to 16, right, ranges. Before we do that, we need to see the average daily range over the last 10 days.
Yeah.
The average, look, we've only moved 16% of the average 10-day range, right, which is 416. So first and foremost, we need to draw out 416 projection tool. It's so crazy when we have like low volume days like London is right now. Like, and then you draw this out and you're like, malarkey, there's no way. But then it just plays out.
Yeah.
10-day. 416. And we know that due to August 5th and the first week of August where volatility increased, volatility being how far we move each day or each hour, blah, 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 that we're in a slowdown period, right? And so now we're going to do this right here. And remember, I like to test my work with Austin Clark's work because his stuff is coded correctly and designed correctly. So I need to be on the 5-minute here. I'm on the 5-minute here. So over the last 16 weeks, being a quarter, right, we can see that Wednesday, 4 to 8, usually averages between 38, 99 for 8 to 12, and 78 for 12 to 16. So I'm going to put 38. We're going to put 8 to 12, which is 99.
Can I just double check with you the time period look back for those averages there?
Okay. Yeah, the 16 weeks.
Yeah.
And then let me do this last
16,
one real quick.
Yeah, no worries. So that would be 90.
And then this one should be 78, which would be right there. So now you can see that what we've done in London so far, let me go back to the screen. You can see that the average 10-day range synchronizes with the time frame ranges, right? So our job is to identify, right, what this looks like. So from 4, so we know this because this is where the expectation management happens, right?
Yeah.
Expectation management. Are we going to move 1,000 handles in the next 15 minutes? Like for the next 4 hours? No, we're not. Like this data tells us concretely that no. Like what your expectations for the trades that you're in should be, right? So we know that from 4, let's get this aligned. 4 to 8 looks like this, right? And it has not maxed its full potential yet. And then we can come over here and put our 8 to 12.
Yeah.
Right? And if we expect to actually reach down, right, and get netted somewhere in here, right? This is where the low of the day zone comes in, right? Like if we expect the low of the day to be right here, and this is what becomes cool when the market shows its hand. Right now it hasn't shown its hand where daily momentum is shifting or daily distribution is shifting. So we can put this where we expect, and then we also know that we have to deal with this right here, this range right here. And we already know, based off of what Asia and London did and the database that we looked, that the low of the day scenario is the highest probable scenario right now, right? So we can expect the 9:30 and 10:30 to be netted somewhere in this area, and for the high of the day and the close to be somewhere up here. And knowing that FOMC minutes is still in play, right? We can expect like this distribution more to happen in the afternoon than in the morning anyway. So now we can draw out our low of the day zone, which is going to be this 60 handle move right there between this probability and right here. And we can draw our high of the day zone, on this probability right here. And so now we've used data we've used nothing but data to build out our game plan going forward, right? And we know that we can even draw this low of the day zone to incorporate this 55% probability, right? But we've used data to identify that we're not going to trade this blindly, but to kind of give us a compass of where we're at for the
Yeah.
day.
Yeah.
And, the individual trade models like Austin Clock will trade the midnight snap from 8 to 12 and then the distribution trades, right? He can use this as weather. I would trade the midnight snap and another trade that I have during this time, 4 to 9 o'clock time period. But it will be paying attention to this right here, and then I can pay attention to the captain back test,
Yeah.
which is from 10 to 1400. I can trade that this way. But I have these independent models that I trade every single day that I'll use this as a weather channel, right?
Yeah. I got a couple I do in there as well. Obviously, I'm adapting to.
Gotta move this down to here because this is incorporated in the all-day range. We can just put it right here. They incorporate this 55% probability. And then if we come down here and then we continue trend, that's fine. It tells us we're trending down or trending up.
Yeah. Yeah.
But because yeah. What were you saying?
No, I was just. It's like I breathed new life into a couple of the time candles that I have used in the past. Because, like as you say, you kind of call this like a weather report. Now with the weather report, I'll try and sail that with the wind, right? And it seems to be something that, to be honest, that particular strategy could have done with. So it's helped it immensely, and there's one or two other things that I'm looking at as well.
And
Rolls
so,
your oyster.
yeah, definitely. One thing I want to point out, right? This Josh Yu calculator that's calculating the 20-day is calculating that first week of August. And I want you to look at the difference between 20 days, where the high and low of the days, versus the average 10 days. This is why it's important to pay attention to that realized volatility, right? Because this is a crap ton of difference, right? But in reality, this was 20 days, and it had the week of August 5th where we moved 1,000 handles in one day, versus this one has already deleted that equation out of the works, and you're getting a more realistic view on what to expect, right? Which is why, like, you can see I'm not incorporating the extremes of this 20-day, right? Because it doesn't, like, we could and we can. We have the news catalyst and are on the right week of the month for us to meet these criteria. But for now, like, this is the probability, and this is what I'm going to stick to.
Yes.
Right. And then if we continue to trend up, right, and destroy the max distributions, right, and what I can do is I can just sit here. I'm going to pull this down to that probability. I can sit here and I'll see it clear as day right here on the live price chart where I look at, previous hour mid in the 5-9 box, right? Like this is the live price portion of it, and then I'll have the distros on here and aligning them exactly the way they lie to keep myself situational awareness, keep situational awareness in my decision making.
Yes.
All right, that does it for the hour.
Brilliant.
I will publish the newsletter and all that, and we'll go from there. What's up?
No, I was just going to ask one quick question before you have to go, if it's okay.
Yeah.
With respect to that, those daily, the tool that you dropped on just to check that you were within those boundaries of the probabilities you had. I think you mentioned, Josh.
Oh, this one? Yeah, it's the Josh Yu open, high, low, close stat map. And then he has another one called the session where you just incorporate the time. It's a pretty cool tool.
I'll check it out.
Like I use it for my weekly and my dailies just to just to check my work to make sure I'm not doing anything extreme.
Yes.
Right. So one thing I will promote while I'm here, right? I will promote Austin and his pack trade group, even though we're not taking students in right now. right? He does a live stream every Monday from 8:20 on, and then most Fridays he does one. He trades independent models that are based off of pure statistics. This is independent based off of pure statistics. So this is your map, and he is the vehicle that you drive using the map with, right? They have both. This analysis has independent statistics versus his trade models that have independent statistics, right? So when you line the two together, it's just an amazing thing. So make sure you check him out, and then I am already partnered with that team, and I will be going live with Trading This Live in October and showing you guys how to do that. So you can look forward to that as well.
Yeah.
All right,
I've
any
listened.
questions before I jump?
No, you go, Mickey.
All right, brother. What were you going to say?
No, I was just going to say I have popped in to Austin's broadcast on a Monday. Pretty cool.
Yeah, I like him a lot because he's humble. He's a man of integrity, and
Traits that you want.
he's probably one of the. He's trying to promote responsible growth and realistic expectations in trading, and that's something that I've aligned with my whole trading journey. And he's got values and characters that I respect, and he's the kind of person I want to be around.
Yeah.
I don't want to be around, people that are unethical, and because making money is that's whatever, that's the secondary effect, right? Like you'll see that a lot of veterans are in the trading space just for the community effect. We can all make money, right? We can do it alone in our mom's basement, but like it's that community feel, that and that camaraderie that we're used to. So, and another reason why you should trade with veterans is we're not full of shit. We don't have ego and pride issues, and we'll tell you how it is. We'll tell you what we know and what we don't know. Like I'm not going to sit here and feed you bullshit if I don't know what I'm talking about. I'll feed you what I know.
Yeah.
Right.
And
I
total respect for that. Thank you, Mickey.
I don't recognize faces yet. Danny, that's Costa. He's a good friend of mine.
Hey, Danny.
I'm just catching up on the chat. Costa, that's Sapphire Trader. Jimmy, Mr. 930, my favorite trader of all times. Jerry, cool. All right, thanks guys. Squirrely McSquirrel, good morning.